Okay, guys. Um, Welcome to tonight's session, and also Happy New Year to you guys. This is first of December, 1st of January, 2025, and I mean it's not been easy, but we're grateful that we're able to, you know, make it to this new year. Okay, hopefully we all would end the year together in good health and massive profit. And as it is a new year, there are a lot of things that it would require from us if we are going to be successful. Okay, every trader desires to be successful, but success in trading is beyond that desire. It takes a lot of things. It is your dedication, your work rate, how much effort do you put into this market, into understanding this market, into financing your skill. If have you built yourself to the extent whereby you are you are very sure of what you know. Okay, so it is beyond you just coming to the screen or wishing and hoping that 2025 ends in a profitable way for you. It's also, if it's going to end profitable, it have something to do with the work you put in. Okay, hopefully we'll able to have a lot of conversation this new year, and I'll be able to expose you guys to things in the market. Okay, for some of you, when you come to my channel and you watch my video, um, you learn new things. For some of you, you improve in the things that you have learned. And whatever category you find yourself, at the end of the day, what matters is that you use these things to start making money from the market. Okay. This year, for those of you who are lucky to come across this channel, this year will definitely be the year of profitability for you. If you the condition now is that if you follow what I am teaching, what I'm going to be showing to you in this market. Okay. Um, those of you who consider me to be your mentor, it is actually a privilege I do not take for granted, and I am also willing and dedicated to making sure that those of you who see me as your mentor, you get the best from me, so that at the end of the day, you live a life that is filled with um, profitability and progress, a successful life. So mentorship is beyond coming to teach. Mentorship is a radiant, it's an old teaching. It's a whole teaching in itself. It covers a lot of things. And for those of you who consider me to be your tutor, I do. I mean, there's a lot of things that you are going to be learning also. Make sure that whenever you come to class, you hold your notes and you pay attention. Wherever you're confused, you note them down, and you might follow me on Twitter, on X, and just tag me to your questions. If I see your questions, I would respond to them and I will answer them. And the ones I cannot answer, hopefully, when we start hosting live sessions, you'll be able to ask them and I can answer them. The whole idea is that by the end of 2025, you should have been in a position that is better than where you are currently. For some of you, your problem now is how to identify the buyers in the market. Some of you, you don't understand candlesticks. For some of you, you don't understand, um, some levels. So for some of you, you are confused about the idea behind how orders are executed in the market. All these things would be answered, and they will definitely be, um, you get your answer, but you're not going to get your answer if you do not pay attention in class. In fact, the funny thing is that at the end of it, you might get your answer, but because you weren't paying attention, you're gonna miss that part. Okay. So we have a lot of things to cover this year, and I'm hoping that we'll be able to cover all of them and even do more. In fact, I'm optimistic that we'll cover all of them and we'll do more. Now, before I go into teaching, I want to let you know that you see the market business model, this channel that you are in, is it's a what's it called now? It's like an encyclopedia. Okay, it is a combination of my thought process, me chat with Max, my thought process, how I view the market, how I see the market. And you know, it is not just because of how I see the market, but also from the things I have studied and I know and I understand. I have done a lot of research, done a lot of study, spent thousands of dollars to acquire this knowledge. Now, these things that I know, which are the facts, which are the truth behind how this market operates, my understanding of them is what I am expressing to you here, on this channel and anytime we come to class. So what I'm teaching you, like I said, is not something that you're gonna see out there, or something that is what am I gonna use now? Something that is popular or public knowledge. In fact, I don't know if this my channel is going to be popular, but the moment I see this channel start getting popular, I will start removing some of the videos that are very essential. So those of you who are here firsthand, you're the one that would, have access to basically everything. But the reason why I'm saying that is because at the end of the day, these are not things that comes from somebody or a random person thoughts or way of seeing the market. It is my way, my perspective of seeing the market. I see the market as a business. I come here to deal. I come here to deal. When the business is in favor of me buying, I buy. And when the business is in favor of me selling, I sell. But for me to be able to analyze and understand if I should be buying or sell, there are some principles, some context, some understanding, some body of knowledge that I need to have, that I need to possess. For those of you who have physical offices or physical business that you run, you will definitely have items or products in stock. Let's say, for example, you sell noodles. By the time you want before you start that noodle business, there are some knowledge you must have. You must have knowledge about the noodles market, about how to store noodles, how noodles are made, etc. You basically have knowledge about the business of noodles. I hope you get. So there will be seasons when you know that you should be buying more noodles, and there are seasons when you know that you should not be buying as much noodles as you have bought. There are seasons when you know that you should buy a certain type of noodles. There are new seasons when you know that you should be buying certain types of noodles. There are seasons when you know you should be willing to sell your noodles at cheap price, and there are seasons when you know you should be selling those noodles at expensive price, at premium. The point I'm trying to make here is that this market is a business and we are dealing in it. So we need to understand how to transact in this market. If you don't know how to transact in this market, it is to your detriment, because when you enter, let's say, for example, you take an entry, let's say you take an entry here, you buy here, you place a buy order here. Well, for a little period, price went up and it was going your way, but eventually it delivered down. Or let's say, for example, you sold, let's say, at this spot here. When you sold here, price went up and took you out. Maybe your stop loss is somewhere here. It took you out and then still go your way. The point is that in either scenario, the first one, direction was wrong, but your entry gave you small money, right? Now imagine if you know around this spot here that okay, your direction is wrong and you break even or you go out with the little you have. That is you dealing in business efficiently, right? Or in this scenario where I said, you sold here and price took you out before going down. The point is that it took you out, it gave you loss before going your way. Now imagine if you knew where to put your stop loss and not make it too tight. The point is that this is a business, okay? And it is the person that knows how to deal in this business. You know how to buy cheap. I mean, if you go to the market, you don't want to buy. If you want to buy, let's say, for example, you want to buy fish from the market, and they're telling you the fish is 2,000, let's say $2, and then you go to another. You might be moved to want to go to another stall to check the price if you feel like that price is not okay for you. I hope you get. By the time you are buying at that price, that is the price you consider to be okay. Okay, that is your bidding price. The asking price or the asking price is $2. And is that $2 okay for you? Are you willing to bid at that $2? If you're not willing to bid at that $2, what happens? You move to the next stall. If the next stall is selling at $1.50 and you feel like, okay, now $1.50 in comparison to $2 is cheap, yeah? Exactly. That's what we're doing. So whenever you're looking to buy in this market, we're looking to buy cheap. Whenever you're looking to sell at expensive because you're asking for a higher price whenever you are in the position to sell. Now, how do we know this thing? How do we know when to bid, when to ask? How do you know when to buy, when to sell? This is what the market business model exposed to you. But I can't just open the chart and start telling you, when you see this thing and you see that one, it means you should sell. When you see that one, and when you see this one, it means you should buy. Without giving you a proper explanation as to why that is that and why this is this, why what is what. And this is the reason why I started from the scratch for you people. Apart from the fact that we have beginners among us who would be learning this concept probably for the first time, it is also because I want you to understand this thing. The market business model is a concept. It is wide, it is broad, it is big, it is large, it is complex in some parts, it is simple in some parts. It is your understanding of it that makes for the results that you produce eventually. So the market business model does not have anything to do with psychology. Okay, everything in itself, its whole. The market business model is complete. It is you, the trader, that should pay attention. So this is the reason why I started from what is explaining what a candlestick is, how it's built up, etc., etc. So in our last class, I explained what a candlestick is. I told you it has two parts, the body and the wicks. I explained the body as open and close the wicks, and I told you there are some rules to how a candlestick is formed. Now, I could tell you that, okay, since now that you know what a candlestick is, I could literally just move on to the next topic and just say, okay, that's it. After all, it's you know it. But do you understand it? That's the thing there. You don't. So for us to understand a candlestick, we need to understand the rules that binds candlestick or how a candlestick is formed. We need to understand the constants and the variables of a candlestick. We need to understand the entities, the things that the things that we pay attention to as traders when it comes to, candlesticks. Okay? So we're going to continue from where we stopped last year. Now, I already explained, what a candlestick is, what it does. I'm sorry, what it is, the body, the wicks, and all. Now, let's move on to the rules that bind it. Now, if you have not, maybe you're just watching this video, this is the first video you're watching, I would advise that you go to my previous video. That should be MBM 012. Yeah, that's where I started talking about candlestick. Okay, this is a series of teaching. Okay, I've started teaching it from MBM 001. It's a body of knowledge, everything in itself I'm teaching together. It is not a stand-alone understanding. It's not a stand-alone lecture or class. It is a continuity of what I've been teaching you. Okay, now you see, for the creation of a candlestick, a candlestick a candlestick has a body and a wick. Okay, but this body and wicks are created. And how are they created? That's what I'm going to be explaining. Okay, how are they created? Now, the first part of a candlestick that is created is the open. Now, this remains constant, it does not change in any candlestick, crypto, wherever market. The open part of the candle, which is part of the body, yeah, the open, that is the first part of the candle that is created first. Now, you see, the strength of understanding this is in your proper understanding of price. I will still talk about price, but you see, the open of a candle must open at a price. The close must be at a price. The high and the low would also be at a price. So when a candle opens, it is opening at a price. Okay? So please pay attention. I'm explaining something here. So let's imagine this candle here, this opening here was at let's say $5. So it opened at $5. At $5. Just gonna make it. Okay, so this opening price here is $5. And then you see, please pay attention. I'm explaining how a candle moves. In the explanation of price, the body of a candle would always remain constant. Okay, and the wicks would be the variables. So let's draw a table like this, and let me explain what I'm saying. What I'm explaining is sorry. Let's draw a table like this, and let's say constant and variables. Variable. Let me just now. You see, there are two parts of okay, to explain this candle thing, you need to understand two works of a candle. The works of a candle. The job of a candle, number one, is to create price, and secondly, to deliver price. Okay? Please pay attention. It creates price and it delivers price. Remember, transactions are what makes up a candle, but because we can't see this transaction as traders, we come to candlestick, yeah? So your candlesticks create price and they deliver price. Now, when we are looking at price creation, the body of a candle will always remain constant. Constant in what sense? The body of a candle, yeah, the body of a candle in when we're talking about, the candle remaining constant based on price creation, yeah, the opening of a candle, once a candle open and it keeps on moving, it must either close above or below. Okay, it must either close above the open or below the open. These things would always remain constant. When a candle open and it wants to create price, yeah, it must always either go above or below. So when you see a candle open, yeah, and it keeps on going up and eventually it close above, yeah, what it have done is just created price at this price point. If it opens here, let's say it opens and it closed below, what they have done is it just created price at that level, below that level. Okay, this would always remain constant. A candlestick close would either be above or below. It doesn't change. It doesn't change above or below. Okay, now that we know that, based on the constant, it's constant price deliveries, that a candlestick close would definitely always be below, would always be below or above the open. So the first part of a candle that would always open is the opening price. I don't know if I can type these things. So based on constant, yeah, the first rule of the candle is that the first rule is opening price first. So this would always remain constant. For the creation of a candlestick, opening price first. And the second one is that the close will always be above or below the what's it called now? The open. Now, you see the second rule, yeah? It's broken into two. It's broken into two, okay? Now, I don't know if I can type that, but let's try, yeah? If the if the close is above the open, it means price is bullish. And if the close is below the open, it means price is bearish. Now, regardless of the candlestick color, I hope you guys get it now. This is the rule that binds a candlestick. It is not a rule, a rule of color. It is a rule of price. If a candlestick open and close above the open, then it is a bullish candlestick. And if a candlestick open and close below the open, then it's a bearish candlestick. Please don't forget this. Now, the variable part of a candlestick is the wicks and the highs. And the wick is used for price delivery, not okay. It actually, the wicks actually works, both of them actually work the same way, which I will explain. But for now, let's just focus on wicks as price delivery. I will explain what I'm trying to say. Now, let's imagine that this candle opened here and closed here. So we have two price, the opening price and the closing price. Now, if market opens at $5 and moves higher than $5, definitely this price here will definitely be, let's just put, let's say the price here is, let's call it $8. So from $5 to $8, that's, so price opened at $5, or the candlestick opened at $5 and it's closed at $8. Now, it will be interesting if this is just what a candlestick, I mean, it will be simple if this is what a candlestick is made up of. But no, it doesn't stop there. It remains the wick. Now, how are these wicks? How are they formed? Okay, these wicks, how are they formed? And what do they tell you as traders? You see, the wicks are a result of price movement or candle movement. This is what it's telling you. You see, at a point, this candle that closed here, at a point it went up here. But when it got here, it started coming down. It started coming down. And this is where the understanding of candlestick variables come in. Unless this candlestick close, there would always be movement in price. You see, the moment this candlestick open here, it will be going up, coming down, going up, coming down, going up, going up, going up. Now, if it creates a new high, let's say, for example, it creates a new high, this same candlestick creates this high here and started coming down. You see, that highest point becomes a new high and it starts dropping. If it goes above that highest point before this candle's close, it will create a new high. For this example, price actually went up to this point here, this highest point here, and then it started dropping. In fact, the funny thing about understanding the high or the low of a candle is that, do you know that a candle could actually come here, get to half point here, before it created this high here, get to this half point here and started dropping. Now, as it has dropped, it didn't close. It's still moving. It's still moving. And then all of a sudden went higher than, this high. This was the high. This was the high here. And the price went higher than that high. The moment it goes higher than this high, what happened? It's, prints a new price for us. And it keeps on going, keeps on going. Now, for the creation of a new wick, which a wick high, price must start coming down. Now, you see that point where price start coming down? Let me put it. You see that point where price start coming down? Yeah? That becomes our new high. So if, for example, before this candle close, it goes higher than this high and, goes as high as this level, by the time it start coming down, a new wick would have formed at that point there. You get, and eventually it close here. I'm trying to explain that this is how a candlestick operates based on constant and variable. So the wicks, as long as we are creating price for price delivery, price creation, the wicks would always be the variable, because you might think this is the wick now and all of a sudden something happened and price clears that high and creates a new high as the new wick. Wick now, I mean WICK. The same thing for the low. By the time you see this low here, means that at a point when price opened, now please pay attention to this. It means at the point when price opened, it probably came down here. Yeah, it came down before going up and closing above. I hope you get. The same thing works for a sell candle. When in a sell candle, it means that price opened higher and closed lower, right? So let's imagine, for example, that price opened at this high and then it went up to create what? A high. Remember, in our last video, I explained to you that the wicks does not change. The wick high and low, it remains in a bullish candle, the high is this highest point. In a bearish candle, the high is this highest point. In a bullish candle, the low is this lowest point. In the bearish candle, the low is this lowest point. Lowest price, lowest point. So it could mean that price created this low first. I'm sorry, this high first before it closed lower. Hope you guys get. Now, I'm going to prove to you that the candlestick color does not matter. Okay? But before I do that, let's finish explaining the candlestick. Now, you see this low point here, this lowest point here that price came into is another price point, right? I mean, you will agree that is another price point. And reason is because price left $5 and it came down to create this low. Now, this low point here would definitely, let's say it's $2. And then this high point, because it is higher than $8, call it, let's say, let's say this price point here is $10. Now, you see, if with this explanation that I've given to you, price opens first, and the opening is the first thing that will happen. Okay? After it opens, it could decide to create the low first. The open is constant. It will always open first. That's the law. It's a fact. Now, the variable now is that we don't know, it might create a high first before creating a low, or create a low first before creating a high. We don't know that. In fact, it may create a high, create a low, then take out that high to create a new high before closing. It might, see, it is the creation of high and low that makes price to, move all those gyrations. Don't worry, we'll go deeper into explaining all these things, but it is the wicks that creates the variables, because we don't know if it's going to create the wicks first or the if it's going to create the high first or the low first. But we know that it opens here first and it's going to close above or below. That one is sure. Okay, now how do we know if it's going to close above or below? By the time we proceed in our teachings, I'm going to show it to you. And how do we know if it's going to create a weak low first or a weak high first? I'll definitely explain those ones. We'll get to that bridge. We are not in a hurry. Okay, just pay attention. It might be confusing now, but you understand it as it goes. I'll be using practical examples. Remember, market opened here, $5, went up high to $10, probably came down to $2 before closing at $8. Anyhow, this candle was created. We don't know, but the point is, this is what it's giving us. Now let's delete this candle. Let's delete this candle. Remember, this is a bullish candle, but let's delete this candle. Now let's imagine that I only gave you this price. I did not give you a candle. Can you actually know All I gave you was 4 price points. And I tell you that use this price point to create a candle. You would know that the opening price is where the first thing that would always happen. So we are looking for the opening first. Now, if we read this price, this 4 price that was given to us, what's the highest? 10. What's the lowest? 8. What's the lowest? 5. And what's next? Sorry, what's the highest? 10, followed by 8, followed by 5, followed by 2. Now, 2, 5, 8, 10. I mean, the lowest is 2. The highest is 10. And in between these two price, we have 5 and 8. This is just simple reasoning. Since we know that the low would always be below the open based on the constants for price delivery. Now, this is where I'm going to teach you constant of weeks. Okay? This is where I'm going to teach you constant of week for price delivery and for price creation. Based on price creation, the week low would always be below the opening price and the week high will always be above the opening price. The opening price is it will always be above the closing price or the opening price. Both price, anyone is still the same thing. For price creation based on week. Now I've taught us price creation based on candles, and I said the opening will be the first one that will always be created, and what the close would always be above or below the opening, right? That will always remain constant. For variables of the body, yeah, the week high or the week low would always be created based on the price movement, based on what I just showed you now. Now the variable here is that, and based on week. Now when we go to the week side, the variable is that it's change. We cannot say, oh, this is where the week high will be created or where the week low will be created. It's price is trying to deliver. So it will always be going up and down. We don't know. Sometimes it will create high first, then create low, sometimes create low first before it create high. We do that's the variable. The variables there is that it will always, it could create a high first before a low based on understanding of week. Now for price creation, the week low would always be below the open, the week high would always be above the open. So once you see an opening price, just know that anything below it could create your week low, and anything above it could create the week high. And that is constant based on understanding of week. I wish I can type this, but whenever I come to class, I come to teach, okay, and it's not as if I don't have a team that I don't pre-record or pre-teach. I teach you based on understanding, based on knowledge. That way, I know that I'm teaching you the real deal, not something that crafted together. So it's important that you pay attention. These are the rules that binds candlestick. Rule number 1, opening price will always be first created. Rule number 2, the close will always be above or below the opening of the candlestick. Rule number 3, the wicks can be created at any interval. It could be the high first and the week low first. It could be the week low first or the week high first. Rule number 4, what's it called now? The week low would always be below the opening price and the week high would always be above the opening price. These are the rules. Now, I broke those rules into 2 for your easy assessment, but it still doesn't matter. As we proceed, you understand all these things better. Now that we know that the week low must always be below the opening price, we can tell with 100% that you see this low, this last price here is the week low. And we can tell that this last price here is the week high, because the week high must always be above the opening price. And since we know that based on the rule, yeah, the close must, the closing of a candle could either be above or below price. Yeah, we cannot say that this is the close. Why? Because it cannot, if we say this is the close and this is the open, we cannot have 2 weeks at the same point. You get what I'm saying? The weeks must be opposite each other. Since we cannot have 2 weeks here, it means that one of these two candles must be a week, one of these two, or must be a week high, one of these two candles must be a week low. At least the first thing we can say is, let's imagine that we use this portion here as our opening price. Let's imagine we use this portion as our opening price. And then we now say, okay, this is the week high. Yeah. So I'm just going to draw something there to identify that week high. And then price started, and we say, okay, price closed at this price, and this is the week low here. You see that it makes sense. And what kind of candle is this? This is a bearish candle. Why? Price opened here, price opened higher than it closed. So it opened at $8, create a high at $10, dropped to $5, dropped to $2, create a week low, and closed at $5. What kind of candle is this? It's a bearish candle. Similarly, we can create a bullish candle from this move. We can say, okay, price opens. Another person will tell you price opened at where? At $5, went up to $10, or they can tell you price opened at $5, created the low at the week low at $2. So we can put a line here. So from the opening to the close, to the present price, that is our week low, yeah. And then that's our week low, and then price went high to create a week high here, and then finally closed here. And then they will tell you, oh, this is a bullish candle. Both of them are correct. Both of them are correct. But at the end of the day, one of them would be right. And how do we know the one that will be right? I'm going to show it to you. And I'm going to, before I do that, I'm going to give you this last rules of a candlestick. You see, until a candle is closed, don't assume that the present high would always be the high and the present low would always be the low. I think this is part of trading. Until a candle is closed, you don't have a true high or a true low. You don't have it until it is closed. So what makes us know that this high is a high and this low is a low is because this candle is closed. I hope you get what I'm saying now. The open, yes, truly, we know the open. The open does not change. Fact, this is the opening price. Or this could be the opening price. Until a candle is closed, don't think you know the high or the low. If not, if you try to assume this, you're going to hurt yourself. And this is the reason why until a candle is closed, you cannot tell if it's a bullish candle or a bearish candle. If it's bullish or bearish. Okay, so we still have a lot of things to talk about. All these things are just beginners level. I'm trying to help you understand this stuff. By the time we advance a little bit, you will not even worry yourself about a candle, but you need to understand them. Do you know why? So that by the time you want to show it to someone, you want to teach someone, you want to guide someone, they will not ask you one question and then you start mumbling words and you don't even understand it. I hope you guys remember this. MBM is my thought process, how I see the market. So I'm trying to bring you into my thought. I'm trying to introduce you into the way I see things, my perspective. So pay attention. Now, anyhow you see this candle, you can call it bearish candle or bullish candle, you are right. Okay? If you say, okay, it opened lower, closed higher, you are right. If you say it opened higher, closed lower, you are right. Okay? But notice something. Both the bullish and bearish people, a person, either you are bullish or you are bearish, we agree that this is the high and this is the low. It doesn't change. You see that, right? If you say it opened high and close, it opened lower and closed higher, your high does not change. It doesn't change the high. It doesn't change the low. The only thing it changes, the only thing it changes that the opening price was lower than the closing price. And that person will tell you that, okay, it's opening high, it opened high and closed lower, which is contradicting to the first person, yeah? But still, he didn't change the high and the low. So in either bullish candle or bearish candle, the high and the lows does not change. And this is where the candle of the color does not matter, which I will show you. Don't worry, the color of the candle does not matter. I will show you guys, don't worry. Now, at the end of the day, we need to know who is right. And how do we know who is right? The creation of the next candle. Now, you see this candle here, if I put, let's say I color it green, you can easily tell this is a bearish candle, right? If I color it red, what's the color now? If I color it red, you can easily tell this is a bearish candle. Yeah, good. But that is because of you are looking at it based on color, not based on what it truly is. Based on what it truly is, you cannot tell if it's green or if it's bullish or bearish. Why? Because if I now change the color to a neutral color like this color, let me not put any color. Let me put, let's say, let me color it black. If I color it black now, and I tell you, yeah, what candle is this? If you tell me it is bearish candle, you are right. If you tell me it's bullish candle, you are right. If you say it is bearish, you say, okay, because it's opened higher, closed lower. If you say it's bullish, because it's opened lower, closed higher, right? Exactly. This is why, don't worry, as we proceed, you see why candlestick color don't matter. And this is one example, introduction to that thing. So why? But now, how do we know the authenticity of this candlestick and to know what exactly is price telling us? If price is higher or lower, how do we know that? And this is by the creation of the next candlestick. Okay? The next candlestick is what will tell you what this previous candlestick is. If the now, you see, and for us to understand the next candlestick, we must understand the principle that binds candlesticks together. You see, every candlestick close will be the opening of the next candlestick. That is the only rule that binds candlesticks together. General rule. Of course, we have other rules in MBM which will proceed. But general rule that binds candlestick together is that if a candlestick close here, the next candlestick must open at that price. And if a candlestick close here, the next candlestick must open at that price. Go to your candlestick, except the ones that have gaps, which we'll be explaining also. But the ones that don't have gaps, look at the closing of the previous candlestick compared to the next one. You see that both of them are the same price. Okay, so a candlestick close will be the opening of the next candlestick. So if the next candlestick opens here, it opens here, it doesn't even matter if it goes up or if it comes down. But if it opens at this point here, what this is telling you is that this is the bullish candle. How do we know that? Remember, the close of this candlestick must be the opening of this next candlestick, which means that this candlestick closed high here. That is why this one was able to open here. Which means that the open is here, the close is here, and then this one now opened here. This one might decide to go up, might decide to come down. It doesn't matter. This is where it is the opening of this candle that we need. Now, if I ask you, what is this candlestick? Is this bullish or bearish? Can you answer? Yes. Why? What will you answer? You say it is bullish. Why? Because of this next candlestick has given you that. Did I color it green? No. But are you correct? Yes. This is why the color of candlestick don't matter. And why traders and MBM traders don't use candlestick colors. Don't worry, we'll proceed. We'll go deeper. If this next candlestick opened lower here at this point here, and this is where it's open, it doesn't matter what it does. The point is, this is where it's open. You don't need anybody to come and give you a signal that this is a bearish candle. Why? Because the close of this candle, this previous candle, will be the opening of this present candle. And if this candle is closed, is opening here at the close, and then we have an open, yeah, which is above this close. So this is a bearish candle. In either scenario, the high and the low does not change. I hope you see how I'm explaining this thing to you guys now. Okay? So to the example of, back to this example here. At the end of the day, if I give you this price, you can definitely say it's bullish or bearish and you'll be correct. Yeah. But the moment I add another candle and I tell you, okay, and I put another candle here, let's say I put another candle here, it doesn't matter. The candle might still be in progress. But the point is that I put another candle at this point and I opened it here. And I tell you, okay, now explain this. I now delete this thing here. Sorry. Now, this is the task I gave you. I said, delete this. I said, the task I gave you is that, sorry. I said, using just this price I gave you, now I'm sorry. Using this price I gave you, using just this price that I gave you, and using this next candle as reference or as the link, I'm telling you that, okay, what is this previous candle telling us? So the moment you see that I've put this candle here, you see this present candle here, you see where it is opening is at $5. So you start there. That means previous candle close was definitely here. And if previous candle close is here, then the opening was above here. Why? Because the high must be higher than the open and the low must be lower than the open. Okay? The high must be higher than the open. But then, the close cannot be above the high. So, these are rules, principles. The close of a candle can never be above the high of a candle. It's either a high is not created at all or the close is below the high. Okay, so since I tell you that this present candle opened here, you can just start your close from this. You see this open, start it closed here. That means the next it's opened higher. That's the high here, that's the low there. That means this is what is a bearish candle. See how we use this to understand candlestick delivery. Now, you see, the combination of candlesticks does not matter. We don't even need them. But how do we now use this knowledge of candlestick? How do we use them? How do we understand them? And this is where we now start going deeper into technical analysis. We go deeper into technical analysis by using candlesticks as guidance. This is what will now help us understand vital points. Points like premium, points like equilibrium, points like cheap or discount, premium or expensive, points like clearance, points like inversions, points like what's it called now? profiles, sessions, all these things. It is the understanding of this candlestick that help us understand them. Okay, so let's go to the chart and just try to explain what I've shown to you guys, and let's see how it is, so that we can, what's it called now, so that we can proceed. Okay, now don't mind the little gaps in this candlestick. It's because of I'm on the daily time frame and I'm using Oanda. Okay, on a normal brokerage platform it's gonna be together. Okay, but let's proceed. Now you see this candlestick here. Let me remove all the let me just remove all the colors. Okay, let me change the color. Let me make all of them look alike. Exactly. Now we have both by bullish candlestick and bearish candlestick are the same, right? But now we're trying to understand them. The first thing is that either bullish or bearish, the high will remain the highest point, the low will remain the lowest point. Either bullish or bearish candlestick. The second thing is that the first thing that will always be created in a candle is the opening, is the open. Okay, so let's look at this candle. For example, let's use this candle as reference. Let's use this candle, this one. Let's start from here. So how do we know what if this candle was bullish or bearish? We look at where this one started from. Okay, now because of the way this candle is, we cannot say, oh, it started from this high or it started from this low. And this is because of the Oanda platform I'm using. Okay, so let's just move to the next one that can help us understand it better. Now, of course, it doesn't matter. Okay, it's just because of the platform. But let's proceed. Hopefully, I'll be able to move to. I don't want to go to other platform right now. But these are the principles that binds your candlestick. In fact, let me just go to 1 hour time frame. I think that will be better instead of the daily time frame, so that we can see this better. Okay. Now you see it now. Good. Now let's start from here. Now, how do we know if this candle is bullish or bearish? This one is what will tell us. Where did this one open? It opened here. That means this one closed here. So if this one is closing here, where is the open? This is the opening. And this is the low, this is the high. Now, how do we know this next candle? Through this candle. And how do we know that this candle is bullish? Because it's closed here. And it doesn't matter what it does. It might go up, it might come down. It doesn't matter. For example, let's use an example here. How do we know this candle is bullish? Because this next candle opened higher. This next candle opened at the close, and the close is above the open. You get? That's how we know it's bullish. Now, this next candle here, it opened at this price and closed higher. How do we know it closed higher? Because that was where this one opened. Okay, and when this one opened at that point, what happened? It started selling. Okay, so you can see that the point is that every single candlestick open would always be the close of the previous candlestick, and then we can use that one to know what candle is telling us. And this is the reason normally when people come over to my workstation, they would literally see my candles like this. I don't give them color or anything, because I don't need those color. I don't use them. Okay, I only I don't use them. That's just the thing. I don't use them. I don't use candle colors, because we don't even use those candle colors in MBM. Based on what I've told you, some buying, you will see a bullish candle, but everything in that bullish candle is screaming sell, 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 sell. Yes. It's only bullish because of that was how it closed, not because of that is the volume or the momentum in price. I will explain all these things to you guys. Okay, so let's just put a stop here for today. In our next class, MBM 014, we'll be proceeding in our lecture where I'll be showing you, more. I'll be giving you more knowledge about price, how price move, candlestick, and in fact, I think we are getting our hands dirty already. Okay, so very soon we'll be able to go to the chart, know what price is doing, know how to engage price, how to trade it. How do we know if this candle is going to go up? Sorry, if the market is going to go up and where it's going to reach before it starts selling. And if it gets to this level, it start going back up. How do we know that when it gets to this level, it will invalidate that level and we don't need to start buying from that level again? How do we know that we should be buying from? All these things we'll know, we'll answer them, okay? So until I meet you guys in the next class, you have a wonderful night rest. Okay. Bye bye, guys.